In this video, I'm going to do the technical analysis of S&P 500 index for the week commencing from 17th of May 2021. This is the weekly chart and these are the weekly candles. If you see this, the last candle, okay, this is a bearish hammer, but in the bull direction. So this bearish hammer, it was formed because of the very heavy movement in the Dow Jones Index. So unlike Dow Jones, so Dow Jones is indicating a correction in the market and it is expecting to fall. So this S&P 500 index, it still has some potential to move up, okay, and then it may come down. So you need to be very careful when you are dealing in the futures and options of the S&P 500 S&P 500 index, because it still has some this potential. So its ultimate resistance, its critical resistance lies at 4314.5 or 4315, you can say, or in simple you can say 4300 is the critical resistance for S&P 500 index. And we have intermediate support lies here, which is around 4100. Okay, so and then there is another support here, which is at 3850. So now whatever is going to happen in the coming week, in the week of 17th of May 2021, it will happen between 4300 and 3850, 3850. So these are the two, the resistance and the support. If the market goes sideways, in that case what will happen is that the market will move between 4300 and 4100 only. Or when the market remains stagnant, then it will be between 4300 and 4100. Else it will move between 4300 and 3850. And one more thing, again, for last few weeks, okay, I'm telling this thing, and you can see this okay, here clearly in the picture, that for last few weeks I'm saying that there is very heavy deviation in the price and the moving average. Very heavy deviation in the price and the moving average, and this was not supposed to be there. There's the problem. And if you see that the market last time the market respected on the weekly chart, the last time market respected the alma or any of the moving average, it was October. Okay, and the market was around 3250. So after 3250, market has moved to 4200 or something 50, like. So the market has moved by almost 1000 points, almost 1000 points without any correction. It is impossible. It is impossible. The market has moved by 1000 points without any correction. It is impossible. Market was supposed to enter into a correction, okay, means in the S&P 500 index, like 500, 700 points, okay, 600 points. So 500 to 700 points, the market was supposed to come into the correction, but the market did not. Okay, so it's so means there is something wrong with the market, and I have said this thing, okay, before, and I have also said this thing for the Dow Jones. Okay, so the Dow Jones is up by 8,500 points, by 8,500 points without any correction. So the markets means there is definitely 100% that there is something wrong with the market. So now there is a fear that if the market comes into the correction, then there will be very heavy correction. Okay, so if in case of S&P 500 index, okay, the support lies here. This is the critical support, 3000, you can say 3600. 3600 is the critical support. If the market crosses this support 3600, and then the market will touch 3400, means the same level of August and October. So the critical support lies at 3600. So market may touch 3600 in next 2 to 3 months. Okay, so you can clearly see that that there will be like 600 points means fall, 500 or 600 points fall in the market. Now let's talk about the technical indicators. The technical indicators on the weekly chart, we have these moving averages. Moving averages, this pattern supports the bull trend. So moving averages are clearly supporting the bullish trend. Then we have stock RSI. Stock RSI is still supporting the bull trend. However, there is change in direction here because of this heavy fall, but it is still supporting the bull trend. The MACD is again supporting the stock RSI and all of the indicators, and it is supporting the bull trend. Momentum, now the market has lost its momentum in this week. So if we see, all of the technical indicators on the weekly chart are supporting the bull trend. All of the technical indicators. But again, the problem remains same. Market is in the high risk zone. Remember, market is in the high risk zone. High risk zone means market may fall anytime. Market may fall at any time, and it may come into the correction anytime, and it will come into the correction very heavily, very heavily. The market is in the high risk zone. So just be careful if you are planning to buy the futures of S&P 500 index or the Dow Jones or any other blue chip. In that case, so just be very careful because the market is expected to come into the correction. Now let's move on to the daily chart. Now we are here on the daily chart. On the daily chart, okay, these are the daily candles. It has followed a similar pattern to the Dow Jones, which means that this here, okay, it is forming a lower high, and then it may come down. So this is a kind of pattern the market is forming. So this is lower high. Lower high means there is an opportunity to short. You can sell here. There is an opportunity to short. Now the market may move up. When the market may move up only when it closes above this particular price. This particular price was 4236.4. So when the market closes above this particular price at least 2 consecutive days, or at least 2 days, different days or consecutive days, if the market closes above this price, then only market has chances to move up. Else, if not, then for sure the market will fall. All of the support and resistances will remain same as we have discussed on that weekly chart. Now let's talk about the technical indicators. These technical indicators, if we see that the moving averages, okay, one more thing, that it took almost 1.5 months or more than 1.5 months for the market to respect the WMA. So the WMA to respect the WMA and the EMA. So it took almost more than 1.5 months. So this is a good sign that the market is that the market understands the risk, okay, and it is showing its intention to come into the correction. So the market will come into the correction only when the market closes below this moving average or below the WMA, you can say. Not just one day, but at least 2 consecutive days. So if the market closes below the WMA, or it will be good if the market close below the EMA 2 consecutive days, then for sure the market will enter into the correction very heavily. Okay, So if we see the pattern of the moving averages, then the pattern is clearly supporting the bull trend. However, if you see that rather than moving up, now the moving averages are showing some weakness. Just look into the picture. Okay, the moving averages are showing some weakness. So rather than moving up sharply, now the moving averages are stagnant. So it look like the moving averages are changing their direction. If we talk about the Ichimoku, then the boundary of the Ichimoku is around 4000, approximately 4020 or 4030. Okay, so the market can hit this 4020 or 30 anytime in this week. Okay, provided that the market is not stagnant and the market is not sideways. If we talk about other indicators, then we have stock RSI. Stock RSI is still bearish. It is still bearish. The MACD is still bearish. Momentum, no, there is no momentum in the market. So all of the technical indicators here on the daily chart are supporting the bear trend. On the daily chart, they are supporting the bear trend. Okay guys, so this was my technical analysis for the S&P 500 index for the week commencing from 17th of May 2021.